Hey everyone, welcome back. So today's Tuesday. I hope you guys had a great day. Markets were kind of mixed a little bit today. Bitcoin was down, so we're going to take a look at Bitcoin, obviously. The miners were down as well, so we're going to take a look at those guys. It wasn't a good day for the miners or Bitcoin, at least not yet. And Bitcoin is kind of struggling to stay above our resistance or support line. We'll take a look at it. But also, Stronghold Digital Mining provided some information today, and they are out. I'm probably not going to end up covering them anymore. For one, they don't provide the monthly updates like the other miners do, and it's just hard to get information from them. So, but we'll get into it here. We'll take a look at it. And then we also have Riot and Digihost provided their Q2 financial results. Digihost has done a really good job. Riot is on the right track, but they obviously had a pretty bad quarter. We'll get into it here. So, as always, you know the drill here. Not financial advice, for entertainment only. Do your own research. Don't fall for scams. And I'm investing in following coins and companies for full disclosure. So let's get into the markets here. The markets were kind of mixed today. S&P was up 0.19%. Dow Jones was up 0.7%. NASDAQ was down 0.19%. So it was a mixed day on it. And then the miners themselves, we'll take a look at it here shortly, but they were down for the most part, every single one of them. Bitcoin right now is at 23,894. We have been battling with our support/resistance, depending which way we fall. It's at 23,800. We've been bouncing off of it yesterday. We fell below it today. The only good thing is obviously we bounced above it right now. We still have about an hour left on the trading day for Bitcoin. We'll see if it closes above it. If it does, we may actually go back up. But if it keeps touching this line, the more likely it is to fall back down. RSI is looking pretty good on the daily chart. It's 55. Last time we were around here was on August 5th. Bitcoin price at that point was around 23,300 or so on the close. So we're obviously up on price, which is good. So on the daily, we're still looking a little bit bullish. On the 1 hour chart, we are looking a little bit bearish right now. The RSI has been kind of flat here, you can see, while the price has been falling down. That's not a good sign, at least not for the short term. So short term looks like we may fall below our support here. As you can see here, we've been battling with it here for the last couple of hours, and we'll have to see what transpires in the next 12 to 24 hours. But we'll keep an eye on it. Ethereum is at 1,876 right now. It is doing the same thing. RSI is looking pretty flat here, while the price has been coming down. So short term, we're looking a little bit bearish. On the daily, we're still looking bullish though, at least until we get a change in the things that we're seeing on the RSI and the price and everything else. But right now, we're still looking pretty good on the daily. Short term, I think we're looking a little bit bearish though as well. So let's get into the miners here. Annie was down 2.87% today to 83 cents. Argo was down 8.82% to 58 cents. Bit Digital was down 6.12% to $1.84. Bitfarms was down 8.26 to $2. CleanSpark was down 6.53% to $5.58. Cores was down 3.57% to $2.97. Digihost was down 5% to $1.33. DMG was down 7.94% to 30 cents. Greenwich was down 19.14% to $3.76. Hive was down 7.5% to $6.73. Hut was down 6.46% to $3.33. Iris Energy was down 1.02% to $5.80. Luxfolio was down 0.98 to 10 cents. And Marathon was down 4.36 to 16.88. Mawson was down 4.12% to 94 cents. And Riot was down 6.05% to $9.17. And Stronghold was down 11.6 something percent to $3.19. And let's get into Stronghold here as far as why we're not going to probably cover them anymore. So let's get into that. So Stronghold obviously provides digital mining reports, second quarter 2022 results, provides operational update and reports significant debt restructuring events. So this is not good. So New York NY Dig debt extinguishment. On August 16th, 2022, Stronghold entered into an agreement with NY Dig and another participating lender to eliminate all $67.4 million outstanding under the equipment financing agreements with these lenders and consensually return approximately 26,200 Bitcoin miners, approximately 18,700 of which are currently operating with hash rate capacity of approximately 2.5 exahash currently. So this is obviously not good news. This is pretty much all the miners that they have installed right now. They still have miners on order that would get them to like 1.4 exahash after all said and done. So obviously a big hit to them. So this is obviously freeing up the related fully developed data center slots. The closing under the agreement is subject to the satisfaction of certain conditions relating to, among other things, the transport, delivery, and condition of the miners, which should be fine. So it looks like they're pretty much going to be wiped out here, except for maybe about 1.4 exahash or so. Going down here, so we're not going to look at the numbers at all. And there was something else that I saw here while I was reading it. So this is part of their Bitcoin mining update. And after giving effect to the miners being returned to NYDIG, Stronghold's current mining fleet is expected to be approximately 16,000 Bitcoin miners with hash rate capacity of over 1.4 exahash and total power draw of 50 to 55 megawatts. So 16,000 miners, 1.4 exahash, that would equate to approximately, 90 terahash per miner, something like that, 90 something, roughly right around there. So given that, and given that they're, having to get rid of a lot of their miners, basically return them, is not a good sign. And the other thing was down here. So given Stronghold's reduced Bitcoin miner fleet, the company expects to shift the majority of its power generation to grid sales in the near term. The current forward power curve in the company's power markets is elevated into 2024 and particularly robust through winter 2023, providing attractive economics for its power generation compared to current Bitcoin mining economics. So basically, they're hedging towards power creation, power generation, and not so much on Bitcoin. For that reason, and they also don't provide monthly updates. I'm just going to draw the line here. I think any miner that I cover has to provide monthly updates going forward because it's just too hard to get information from the ones that don't, and then we're kind of guessing and waiting, and that's not fair to you guys or to anybody else, trying to get information on them. So for that reason, so if you guys know of any other miners you want to include that provide monthly updates, bring them to my attention in the comments down below. I'd love to take a look at them. But we do obviously have quite a big list here that we do cover already. All right, so for that reason, Stronghold is out. So let's get into Digihost reports. So there we go. Digihost reports positive second quarter 2022 results, and they actually produced more, or they had better revenue in Q2 than Q1, which is quite surprising given that Bitcoin has obviously fallen down in price over the last, in Q2 really, quite a bit. So that is a good thing to get done. And here we go. So I'm going to have a hard time pronouncing this. Celio continued since inception. The company has made significant investment in infrastructure, coupled with its dedication to securing access to clean and renewable energy sources and being a leading ESG organization. These foundational goals have led to year-to-date revenue generation from mining of $14.8 million, an increase of 49% over the preceding year, and year-to-date realized net income of $20.9 million, EBITDA of $22.42 million, and earnings per share of 79 cents. So this is for the first half of the year. Numbers here, it's not for the current quarter. First half, don't want to go over that. I want to go over Q2 highlights. Revenue from digital currency mining increased by $2.4 million to $7.5 million compared to $5.1 million for the quarter ended June 30th. The company mined 251.68 Bitcoin in the quarter ended June 30th, a 129% increase compared to the same period in 2021, due to an increase in hash rate from its highly efficient miners and initial testing and ramping of activities in North Tonawanda. Realized net income of $3.6 million for the 3 months period ended in June. The company has been building out its new Alabama facility with initially having 22 megawatts of power with plans to expand to 55 megawatts in Q1 of 2023. That's good, obviously, and miners are expected to be installed during Q4, so that's great. So they are continuing to grow there. And we do have also one tidbit of information here that's kind of great. We'll get into the numbers here in my spreadsheet. I included all those in there. And this is actually my second time recording the video because I thought I made a mistake, not only in Digihost, but in Riot. I had to go back and double check everything, and I was actually right, but for some reason I thought I was wrong. So I hope you guys appreciate all the effort I put into this. Next, so North Carolina expansion. The company is pleased to announce that it acquired 25 acres of land in North Carolina with a request for allocation of up to 200 megawatts of power. The company is currently in discussion with potential JV partners. So this is actually huge news. If they can do this, obviously it's going to take a while for them to do that. They got to build out everything else, probably looking at maybe at the end of maybe next year sometime, third quarter, fourth quarter, they might get this all built out. 200 megawatts is probably going to take them a while to get there, but we'll take a look at to see what it would actually involve or what they could be hashing at with 200 megawatts of power. And I think that was it here. So let's take a look at what they could be possibly mining with that 200 megawatts if they do get that up and running, which would be a pretty good increase for them. So we got it at 200 megawatts. You're looking at about 80% of the load capacity. So we're looking at 160 megawatts or 160,000 kilowatts. We're estimating the miners to be at 3.1 kilowatts per hour, so about 3,100 watts. And that would be about 51,613 miners that they could get installed at 3,100 watts. to get us to that number. If those were 140 terahash miners, that would equate to 7.23 exahash in extra growth in hash rate, which would be outstanding. And right now you can probably pick these miners up between $3,500, $3,900, maybe $4,000 a piece or something like that. That would equate to about 180 million or so in revenue, expenditures, and revenue, and in cost that they would have to spend out. So they would have to either dilute shares, get financing or something like that, figure something out to get to that. Plus building in North Carolina, or was it North Carolina? I think it was North Carolina. North Carolina, yep. To get him there, that's going to be at least, I'm guessing, another 15 million. I have no idea how much that's going to cost to build that out. So it's going to be obviously pretty costly, but I think it's definitely going to be worth it for them. And it's great to see that they are actually providing information that they are planning on growing even further into the coming years, which is great to see, because for a while there I was thinking that they were pretty much going to be capped at the 1.1, 1.2 exahash that they have provided already. So let's take a look at Digihost here, the numbers. So they came in at 7.46 million in revenue for Bitcoin mining. I had them at 7.82, so I was a little bit high. I was off by 5.53%. Like I said, I try to be within 2.5%, so it wasn't too bad. But obviously, Bitcoin price, they're calculating on a daily model. I'm using a end of month, so we're a little bit off here, obviously, on that one. Not too bad though. And then let's take a look at their financials here. So current assets is 18 million, 18.8 compared to 50. So obviously a big change there. The biggest change was digital currencies. It looks like they, I can't remember if they sold them. Let's take a look, see if they sold anything here. I think they did. Yeah, they sold a little bit here. It looks like in the last couple months, 9 million, 12 million, almost $13 million worth of that was sold. And some of it could be also just the reevaluation on it. So obviously a big hit there. And what else was there? That was it. Otherwise, everything else had a little bit decrease in cash and an increase in amounts receivable and prepaid expenses. So that increased as well. And income tax receivables increased as well. Total assets added up to 69.3 million compared to 106. So that's a decrease there. Biggest one was a hit on property and equipment. And what else was there a big hit on? That was probably the biggest one there. But the biggest hit obviously was in the current assets that contributed to total assets. Liabilities and stockholder equity. So current liabilities is down to 4.9 million from 14. So a nice job paying down debt currently. And total liabilities is down to 10 million from 17.7 million, which is good. And total shareholder equity is 58.6 million compared to 79.64. But that's obviously based on everything else being devalued a little bit, going down. And then here are the revenues. So in Q1, excuse me, they had 7.3 million in revenue. In Q2, they had 7.4, so they beat it by about $140,000, which is actually pretty good considering that Bitcoin price has been falling down. So that's a good thing there. That's really good. And expenses, cost of revenues, exclusive of depreciation and amortization, as shown below, was 1.6 million in Q1 and 1.1, almost 1.2 million in Q2. So nice job getting that down. I don't know how they managed to pull that off, and we're seeing obviously energy prices going up. So congrats to them on pulling this off. This is actually really good. Plus they actually mined more and everything else. Other production costs, let's see here, cost of revenue was 6.6 million here for Q2 compared to 6.7. So that's also really good, seeing that decrease there. Profit wise, it was 860,000 compared to 581. And if we just take a look at the revenue for mining minus just the cost of revenues, they were at 5.6 million in Q1 compared to 6.2, almost 6.3 in Q2. And a gross profit margin of about 84% compared to 77%. So that's also a good sign there, being more profitable, which is good. Operating expenses also decreased to increased to 444,000. That was basically, let's see, which one was the biggest one. Office administrative was up about 389,000 or so. So that was a big hit there. What else was there? Professional fees actually went down, so that's good. Foreign exchange was up. Loss on sale of digital currency, so 12.17 million. And that was that. Change in fair value was up also. Reevaluation of warrant liabilities was up also. and then loss on revaluation of digital currency. So it came in at negative 444,000 compared to negative 68,000. And then income loss before tax and income was 415 for Q2. Net loss was actually I had a profit of 3.5 compared to a 59,000 here. And total comprehensive income for the period was negative 1.3 compared to 385, but they're saying that they got 13 cents. Net income per share was 13 cents and diluted was 13 cents. So that's a good sign there. So they have obviously done a pretty good job here in the quarter. And based on all that information, we can go over here. BTC mine was 251 for the quarter compared to last quarter was 188. Starting hash rate was 500. We went up to 597, an increase of 97 petahash, which is good. We had an 85 petahash increase in the prior quarter. BTC mined per exahash was 458 for this quarter compared to 412, so that's a good thing there, getting that efficiency up. Cost to mine 1 BTC was 26,000. That's basically everything included for the cost of revenue, basically compared to 35. So that's obviously a good thing too, getting that lower. And then cost to mine 1 BTC, that's just including the cost of revenue. I think it was down here. Which one was it? Liabilities. It says revenue. So it's just this part here, taking the self-mining minus the cost of revenues, and we ended up with that number over here, the $4.7 thousand. So that's really good as well. Enterprise value, 39.3 million. Debt to equity went lower, which is good. We want a lower number here from 0.22 to 0.1831, which is good. And then also current ratio, which basically takes in the total current assets and divided by the total current liabilities. So they have it basically 3.3 times over. They could pay those in Q1, where now they have 3.8. So that's obviously an improvement as well. So that's a good sign there. So overall, really good quarter for Digihost. Then based on what we're looking at here now, we obviously have them at about 1.14 exahash for future hash rate, 52% installed. Currently, they're going to be last 4 quarters, including the quarter that we're in right now, we're looking at possibly 29 million total in revenue. 50% PE ratio of 10. We're looking at $5.26 for the stock at 75% net income from gross revenue. We're looking at $7.89 with a PE of 10. If they actually announce they're going to be growing, their hash rate to another 7.2 or something like that, that is obviously going to have a much bigger impact on them, where the PE obviously I think can go up to 15 or something like that. So then we're looking at 1183 to 789, and if we get up even higher to 20 PE, we're looking at 1578 to 1052. So in my opinion, way undervalued right now where they stand. But we obviously have to see how they can execute on all that. It's going to be a while before they get to possibly the extra 7.2 exahash. Okay, so that's Digihost. Great job by them on this quarter. It's not an easy feat to do better in this quarter than the previous quarter with Bitcoin coming down in price. So congrats to them being able to pull that off. I think Bitfarms was the other one that, I have to check all these, but I think Bitfarms was the other one that actually did better in revenue, if I'm not mistaken here. Yeah, I mean, they beat it also, 41.8 million compared to 40. So there aren't that many companies, miners, that were able to do that. There's only possibly one other one, but I have to double check everything here. Okay, let's take a look at Riot here, and we'll get into the information. There it is. There's Riot, and we'll start out at the top, and let's go to Riot. Okay, like I said, this is my second time recording because I thought I made a mistake in Riot, but I didn't. So let's get into it here again. So Riot increased mining revenue by 47% to 46.2 million for the 3-month period ended in June 30th, as compared to 31.5 million for the same 3-month period in 2021. Driven by an increase in the number of BTC mined, which was negatively impacted by the lower BTC value in Q2, which was obviously, we've known that. And the reported data center hosting revenue of 9.8 million for the 3-month period ended June 30th, following the acquisition of Whinstone US in Q2 2021. I'm not a big fan of mining. Sometimes I know it's a necessary evil to build out, and obviously here they acquired it, so they got to kind of do it. They may have some contracts that are already pre-pending on that one. And then an increased BTC production quantity by 107% to 1,395 BTC during the 3-month period ended June 30th, 2022, as compared to 675 BTC during the same 3-month period in 2021. So obviously a nice increase there. But unfortunately, they were not able to beat revenue for Q2 compared to Q1. But we'll look into it here. There was something else here. We'll get into all the details here. Okay, second quarter recent operational highlights. So subsequent to June 30th, received an additional 9,316 new S19J Pros and deployed 4,320 S19J Pros in Riot's immersion cooled buildings, with an additional 7,200 miners staged for deployment. Upon deployment of the staged miners, Riot expects to have a total of 47,511 miners deployed with a hash rate capacity of approximately 4.9 exahash. So that's going to be really good. Continue to make significant progress on the company's 400 megawatts expansion at its Winston facility. The expansion is expected to be completed in Q1 of 2023. The final components of the build-out of each building are being completed in parallel with miner deployment, so that's really good as well. So they are continuing to build out, which is good. Completed Riot's first immersion-cooled building at its Winston facility, Building F, with 23,000 S19 series miners fully operational. Placement of miners Building G, Riot's second immersion-cooled building, continues with initial miners already deployed and hashing. And then began deployment of company's previous announced 265-acre 1 gigawatt expansion site in Navarro County, Texas, with Bitcoin mining operations at the new facility remaining on track to commence in summer of 2023. So we're basically 10 months out before that happens, and that's really good. So, I mean, they are still growing tremendously here. Hash rate growth. So by Q1 2023, Riot anticipates a total self-mining hash rate capacity of 12.5 exahash, assuming full deployment of approximately 115,450 Antminer ASICs and excluding any potential expected incremental productivity gains from the company's utilization of 200 megawatts of immersion cooling infrastructure. Substantially all of the company's self-mining fleet will consist of the latest generation S19 series miners, which is great. We still don't know anything about as far as the improvements in hash rate from utilizing the immersion cooling. That is something that's probably going to come, I'm hoping, within the next couple of months, or we'll get it in the next quarter report as far as what those improvements are, whether it's 20%, 25, 30, 35%, what kind of improvements have been able to make on the miners on those. So we're waiting on that. And I'm trying to see if there's anything else. There it is. As a result of this assessment, Riot recorded an impairment to goodwill of $349.1 million related to the acquisition of Winston US and ES Metron in 2021. It's probably not a bad time to do it. With Bitcoin being down, you might as well just put everything on the book, make it as bad as you can. That way, going forward, the following quarters will be much, much better for them. So that's okay. And I think that was it here. Let's take a look at the numbers that I have for them in the spreadsheet. And I had them at 43 million for revenue, just on the mining part of it. They obviously have also hosting and the other business segment as well, but we're only looking at the hosting part of it. So they reported 46.151 million. I was off on the low side by 6.8%, which isn't too bad, but I'd still like to be closer to the 2.5 or better. But it is what it is. With Bitcoin prices coming back down, it's hard to track, like I said. And the miners using daily price of Bitcoin, and I'm using the end of month price. So there's a difference there. Let's look into the numbers here, and we'll call it a day. All right, so assets. Assets went actually up. So 486 million in assets compared to 439 million. So that's a good thing. Biggest increase was obviously cash and cash equivalents was 270 million from 113 million. Sorry, my throat's starting to get dry and may have to take a sip of water, which I don't have down here, which was my mistake. So we'll try to battle through it. Digital currencies obviously is down 226 million from 189 million. And they obviously sold quite a bit in July as well. So that's probably lower now. Future power credits is down a little bit to 54 million from 79 million. So they must have possibly used some of that up. And then long-term assets is at 1.4 million compared to 1.4 billion from 1.5 billion. And the biggest hit on that was probably the goodwill here, 349,148. And that was from Q1, which was taken out in this period. This is going to be down further down below. But obviously that, what else was a big change here on it? I think that was probably the biggest one. Other than that, property and equipment was up 411 million from 325 million, which was good. Deposits was up as well. Derivative assets was up as well, which is good. Everything else was fine. Liabilities. So liabilities came in at 100 million compared to 116. So that's a decrease. That's a good thing. Biggest decrease was probably, which one was it? The contingent consideration liability, future power credits, current portion. That was the biggest one here. Otherwise, we were pretty much up on accrued compensation, billing in excess of cost and estimated earnings, and accounts payable and accrued liabilities. That one was up. So total current liabilities, 100 million. Total liabilities 147 million, down from 162 million. So that's actually pretty good. We had a decrease in, what do we have a decrease in here? Not much of a decrease between these. A little increase on other long-term liabilities, but that's about it. So total stock holders' equity was 1.28 billion compared to 1.387, and then obviously revenue. Mining was 57.94 million in Q1 compared to 46. That was obviously a big drop there. Approximately 11 million plus on that. Big drop. Hosting was pretty much flat across the board. Engineering was actually up 16.9 from 12.1. Other revenue was pretty much the same, 24,000. Total revenue was 72 compared to 79, so they're down from Q1 on it. Costs on mining did go down to 17.9 from 19,000, which is good. Hosting went up actually to 15 million compared to almost, well, off by 200,000 or so. Not too bad. Engineering was way up 15 compared to 11. And selling and administration was pretty much flat, 200,000 less. Depreciation, amortization was up quite a bit, almost 6 million and change. What else do we have here? And that was basically it. Let's see here. So gross profit was about 61% compared to 67%. It's obviously worse in Q2 than it was in Q1. And total income loss before income statement, they had a gain of 35.9 million, where they have a loss of 372 million this time around, which obviously equates to a loss of $2.81 per share compared to a gain of 30 cents in the Q1. So that was obviously the bad news. And then we had the impairment of goodwill, the 349.148 million, which was recorded here. That's why, if it wasn't for that, I think we might have been actually positive on it right now, or at least a lot less negative, if that makes sense. So that is it. Obviously, the big hit was the goodwill impairment. So that obviously took things down quite a bit. Otherwise, it would have been only 13 million or something like that. They would have been down on, and a much better outcome on this share revenue per share on that one. So looking at BTC mined, they did mine a little bit less in Q2, 1,395 compared to Q1 of 1,405. That has to do with them switching the miners from CoinMint and getting it over to their own facility. They were shut down. They also had to curtail some of their energy usage as well. That obviously drove the amount of Bitcoin that they could mine down. But we did have an increase of, let me see here, basically of 38 petahash compared to 1.2 exahash in Q1. And that was based on the curtailment efforts. So it wasn't going to be a good month for them, so they figured they might as well, sandbag it even more. With the goodwill impairment, so that's okay. Cost to mine, let me see here. BTC mine per exahash, so 375 in Q1, 318, which is a big decrease there. They got to get that up. And then cost to mine 1 BTC, with everything included, was 315,000 basically, compared to 30,000 in Q1. And then if we take out everything else and only include the energy for it, or cost to mine 1 Bitcoin, it was 13,059 in Q1 and 12,000.9 in Q2. So that's actually pretty good. That was a decrease, which is something that we want to see. Excuse me. And then debt to equity is actually lower, so that's a good thing. It went down to 0.078, and in Q1 it was 0.0837, so that's a good sign. That's basically, debt to equity ratio, lower is better. Current ratio is basically the current assets minus current debt. So they have about 3.7 times pay it with their current assets. And that was in Q1. In Q2 is 4.9, so that's a good thing also. They have more assets, current assets, that they could pay off, obviously current debt if needed to. So that's a good sign as well. All right, so now looking at the numbers here, we're looking at combined totals for the last 3 quarters, and then this quarter that we're in, we're looking at about 228 million roughly. We still obviously have August and September to go through, and things can obviously change there. They can put in a lot more miners. Bitcoin price can go up as well. That can have a big impact. So that's the current quarter we're in is a variable one. The last 3 quarters are pretty much fixed. Those aren't changing now that we have the information from the financial statements. So looking at it at 50% net income from gross revenue and a PE of 20, we're looking at 1691 possibly for the share price. And then if we're looking at 75% income, net income from gross revenue, we'd be at 2536. Obviously, they still have a long ways to go. They're only 33% installed right now to get to 12.5. I think they're saying that they're going to be at by possibly Q1 of 2023. So if Bitcoin starts running up and everything else, I could easily see them going up to 25 PE, even 30 PE, like it did last time, and then we could be up much higher than that, depending on where revenue comes in. Revenue comes in much stronger in this current quarter that we're in. That's obviously going to drive things up much higher as well. So overall, it wasn't a great quarter for them. Did a lot of things to obviously get them in the right place going forward. The goodwill impairment obviously took a big hit on them. And that's something that we hopefully won't see going forward, so that's okay. And we should see much better numbers from them in the future, I would expect at least. But let me know what you guys thought of all these numbers. There are a lot of numbers going on here. Let me know if there's any other metrics you guys want, any other debt to ratios, anything like that you want me to include in these as well. And I'll try to do that. I still have a lot of miners to go through to include all the Q1, Q2 results. And then we'll kind of update those as they happen each quarter. So it'll be kind of fun to see how they progressed each quarter going forward. And it'll be a good way to track their progress, I guess. So that's it. Hope you guys enjoyed it. If you did, hit the like button, subscribe. It helps me out tremendously. And spreadsheet is available to my Patreon members. As always, thank you to everybody there for their support. And that's it. I hope you guys have a great day. We'll see what else comes down the pipe during this week. I think we're still missing a couple miners that still have to report. We're still waiting on Mawson to provide their July production update, and I think that would be the rest of it. And there's still some, obviously, miners that have to provide their Q2. Hive, who knows when Hive's going to do it, probably in the next 3 months. So we'll cover it when that happens. And that's it. Thanks again. I'll see you guys in the next one.